applied. Okay? All right, so the key benefits of trading radioactively is that we begin with risk management. We start where we can't lose too much of our capital. Okay? And then after that, there's 9 different ways to take money out of your stock and option position without necessarily selling the stock.
Mm-hmm.
You can trade relatively aggressive issues. I've been in Research in Motion, Garmin, Baidu, Google, Apple, all right? But without the associated risk, without the kind of risk that you would normally have trading these kinds of accounts, okay? The Fission membership, we're going to talk about that a little bit later on, but you can watch over my shoulder as I do it in real time, okay?
Mm-hmm.
And gosh, when I talk about catching a rising star, my very first radioactive trade is where I picked up Amazon at $16.09.
Yes.
13 months later, she was over $63 a share.
Mm.
Okay. So if I had sold covered calls against it, what would have happened, Mike? What would have happened if I'd have sold, instead of buying a $20 put, I had sold a $20 call?
Well, naturally, yeah, you would have been stopped out at $20, and you wouldn't have been able to take advantage of the further uptrending movement, of the further appreciation of the stock without putting more money into the position to buy back the call and then roll to a different strike and then buy it back again and then roll it again. So you would have capped your gains, essentially.
Yeah, exactly. I don't want to cap my gains. I want to keep my gains. So by beginning in a place where you can't lose too much, instead of just trying to take income off of a stock immediately, that's where we're able to enjoy the very limited downside and unlimited upside. Okay. Now I've asked a question, Mike. I've asked everybody out there, are you trading now? And we've got most of our results in already. That's marvelous. Appreciate the responsiveness, gang. This is really cool. Now that's interesting. We had 69% voted, and then it says 65% voted. I think more people came in the room.
Yeah, that's right.
It does it as a percent of how many folks are in the room. So, okay, but now we've got nearly 80%. Okay, now we have over 80%. I'm going to go ahead and close the poll and show the results. Okay, are you trading now, Mike? Do you see this?
Yes, Kurt.
You see it. You see it now. Okay, 14% are not yet trading. This group, I have to congratulate you for coming and learning more about trading and limiting risk before getting out there and getting in the trenches. Or perhaps they may, folks that answered this, they say not yet, checking things out. Maybe they have traded before, but they're all in cash right now. Okay, but yes, the answer here is 14% are just checking things out. You're in the right place at the right time because you're going to want to start with the knowledge of how to reduce your risk. Okay, 12% have stock but no system for trading it. Perhaps these folks got stock as part of their compensation plan at work. I'll tell you what, I have a special plan for you. If anybody out there is in a position where they can purchase shares of the company that they work for, purchase shares of that stock at a discount, have I got a plan for you? You're going to need to write me. Just write me at kurt@radioactivetrading.com. I think you'll be very pleased with some ideas that I'll have set before you, okay? All right, 57% are trading now and using a different strategy. 16% are using the radioactive strategy plus others. Okay, and by the way, I'm not jealous if you have learned something somewhere else and then you're able to combine that with the radioactive strategy. That's marvelous. Okay, you ought to do that. The thing that we're famous for, Mike, is reducing risk, both on the front end and then after the initial trade. Every position that we take after that reduces risk even further. Okay, 2% are doing radioactive trading exclusively. That's marvelous. Okay, all right, I'm going to hide the results and I'm going to ask a simple question of everyone, and that is, are you happy with your results over the last 12 months? And pick just one, yes, no, or mixed emotions. We did this at our most recent seminar. Mike, out of the folks there, I would say it was 8%, 9%. It wasn't a whole lot of folks that said that they were happy with their results.
Was it even that high?
I think so.
Okay.
We'd have to go back and do the math. But out of the folks that raised their hands, I think we had probably 8 or 9% that were happy with the results, which meant that the rest were not happy.
Right.
Okay. Hey, I want to appreciate all the folks, and geez, we've had even some more folks come in the room. since we started the last poll. This is amazing. Okay, let me go ahead and close this poll off. Okay, and share the results. It looks like we have very similar results. We have 9% said yes. Okay, 52% said no, not happy. Okay, and 39% say mixed emotions. Now, I'm going to congratulate all three groups. The first group I'm going to congratulate for being here. I mean, if they're saying yes, and yet they're also coming to this radioactive trading methodology seminar, I'm thinking, Mike, that these folks are yeses because they do things like this, because they're always endeavoring to get another piece of the pie or piece of the puzzle, as it were, and learn just a little bit more and apply it.
Sharpening the saw.
That's right. That's why these guys are in the yes category to begin with. Now, the folks that said no, I'm going to congratulate you also, okay? It reminds me of my 13-year-old. My 13-year-old's a little fashion diva, right? And, she saw me wear my jeans and my T-shirt, and I tucked in my T-shirt into my jeans, because it's just comfortable. I like it that way. But I guess that's not very fashionable. And she said, Daddy, admitting you have a problem is the first step. And she was going to teach me about fashion. Well, anyway, admitting that, hey, there's something that needs to change, that is the first step to turning things around. I want to congratulate the folks that said no. They're not happy with their trading results. I want to congratulate you for being here and doing something about it. Okay? The 39% that said mixed emotions, I'm going to congratulate you also. I'll tell you what, I had mixed emotions too. You see, I had mixed emotions because when I was doing covered calls trading, I had a 3% return one month, I had a 4% return another month, I had a 6% return another month, and then I lost almost everything in one trade. Real bad. Well, the thing is, I had mixed emotions because I had seen some good results, but I also got hurt. And I imagine, Mike, that the folks that are here that are saying mixed emotions are in a very similar boat. Maybe not as bad as what I had, but probably bad off. And the thing is, mixed emotions is code for what?
It's really code for no.
It's code for no. I mean, if we meant yes, we'd have said yes, right? Okay, so I don't mean to tease you. I'm not trying to rib you here, okay? I'm just saying let's say what we mean. And so 9% said yes. That means 91% said no, they're not happy.
Right.
Well, I'm going to show you one reason why folks aren't happy. It's because of flawed methodology and flawed teaching. There's a fellow out there that offers a seminar it's called something like Confound Your Stock Earnings. And what he'll do with this is teach you that, hey, it's a really good idea to get into stocks, buy a stock, and make sure it's volatile, so that you can get a real sexy return on your covered calls, and then sell a call against it and make some money. And I'm thinking, well, okay. But doesn't volatility mean that it has just as good a chance of going down as up?
Sure.
These folks that do the weekend seminars, it's not just that seminar, but there's a number of different covered calls trading seminars that will teach that it's a good idea to buy a stock and sell calls against it. And I think that's a dangerous and incomplete strategy. Now, I still sell covered calls. You saw where I just did, right, Mike?
That's right.
But it's with a completely different setup. This fella, I had a fella come to me a little more than a year ago that had gone to one of these weekend seminars. Now, the weekend seminar cost him $3,000, but the education that he got from the market was even more expensive. He bought Boston Scientific, which was the stock that was recommended, but instead of buying the stock, he went to an advanced level seminar where they taught him about leaps. So instead of buying the stock, he bought a leap call. Now, the call gave him the privilege to buy shares of Boston Scientific at $12.50, and when it was trading around $18 a share, that was okay. But when he called me, Boston Scientific was right about there, and he had got into 35 contracts. Why did he get into 35 contracts? Well, I'll tell you why. It's because that's exactly how much he had to trade. So he had several tens of thousands of dollars to trade, and he put it all into Boston Scientific and bought a highly leveraged instrument. And the strategy was he's supposed to sell calls against it. Okay. By this point, he had lost nearly 70% of his investment, and he ended up with a net loss of 87%. Okay. Well, that's to me, that's inexcusable. Okay. Setting up trades properly in the first place don't risk an unconscionable amount. Now, he could have actually put 100% of his money, Mike, 100% of his money into